Hello friends, and in this video we are going to discuss a very interesting case study about the most talked about company in India today, which is D-Mart. Where other supermarket chains are struggling to survive, struggling to make profits, D-Mart is consistently making profits and growing each year at a rapid growth rate. Now, how is D-Mart doing that? That secret we are going to find out in today's video. And let's get started. D-Mart is a supermarket chain started in 2002 by Mr. Radhakishan Damani in Mumbai. As of now, D-Mart is located at more than 200 locations. When the company came out with its IPO, its valuation was around 40,000 crores. Right now, it is over 1.5 lakh crores. And the projected growth rate at the time of the IPO was about 40%. D-Mart is a one-stop shop for all our regular needs like groceries, apparel, footwear, and lot of other small products. Now, what is the overall strategy? Let us discuss first and then we will get into the details. D-Mart always believes in offering its customer best price and it keeps all products of all the major brands. It is generally located in high traffic areas and D-Mart has three sizes of stores. By default, D-Mart opens very big stores. In the big sizes itself, there are three categories of hyper stores, express stores and super. The super ones are the largest, express are the smallest and hyper are the mid-size stores of D-Mart. D-Mart targets mainly the middle class customers and 90% of the stores of D-Mart are self-owned. D-Mart owns the property of maximums of its stores to avoid the monthly rentals, and this increases the asset value of the company every year. D-Mart makes the vendors faster payments and D-Marts invest less when compared to other competitors in the marketing costs. So this is the overall strategy. Now let us get into the details and understand how is D-Mart better than other companies. And in this case study, not just from investment perspective, from business perspective also, you will get to learn a lot of things and you can implement in your own business. So the first secret of success of D-Mart is long-term vision. Mr. Damani is a value investor like Warren Buffett. He believes in investing and having a long-term strategy. That is why he has chosen a very unique model in running his business, where all the other brands and stores generally take property on rent and open their shops. D-Mart believed in buying the properties, having a long-term vision, foreseeing where they want to open the store in future, buying that property right now for cheap and in future opening stores at prime locations. Mr. Damani believes that there are no shortcuts to growth. That is why he has grown slowly in the beginning but profitably. So he always had a long-term vision. The next secret is slow and steady. The other companies believe in taking loans and growing fast as soon as they become successful in one or two stores. But D-Mart consistently opened the stores only when the earlier store was profitable. They started small with less number of branches and they were not hurrying in the expansion and they made profit in each and every store and they have been consistently profitable in all the stores which they are growing in their expansion phase. The third secret of success of D-Mart is the value of relationships. D-Mart has maintained a healthy relationship with all its vendors. That is why the vendors offer D-Mart faster service and a lot better price when compared to its competitors. It also values customer relations and that is why it tries to offer the best service at the least possible cost. They also value their employee and other stakeholders' relations. The next secret is buy low, sell cheap. D-Mart sells daily use products at heavy discounts. It always tries to sell all its products below the MRP and it pays its vendors faster than its competitors. Even if the vendors have a normal credit period of 1 month, DMart pays its vendors faster in just about few days or maximum a week. So their faster payments builds a lot of credibility in the vendors, and the vendors are happy to offer the products to DMart at very cheap prices. So this makes the purchase cost less. In retail, what happens? All the products are MRP based, and that is why everybody is selling at the same MRP price. So there is only one way of increasing your profit margins, that is by reducing your cost. So DMart excels in this by reducing their cost. How are they reducing their cost? By buying from vendors at very cheap price, by avoiding rentals, and by lowering the marketing costs. They have increased their own profit margins in spite of giving discounts to the customers. The next secret here is focus on local markets. Generally, the other supermarket chains, they focus on big brands which are popular across India. But along with those big brands, DMart focuses on the local requirements also of the customers of that particular city or state. Initially, they opened the stores only in the western part of the country, and gradually, as and when they are developing better relationship with the vendors and better customer understanding, they are gradually expanding to the other parts of the country. So they also keep regional brands. Rather than the national brands, there are also some brands which are popular locally in that particular city or state. DMart makes a point to keep those retail brands also, so that the customer doesn't have to go to the small kirana stores for making any purchase. The next secret is focus on the USP. DMart always focused on providing the best price to its customers on everyday basis for all the products. So their focus was completely on their USP, and that is why they did not encourage much of show off or any kind of a decoration in any of their stores. The next secret is they did not follow the crowd. Mr. Radhakishan Damani, focused on their own business. They did not worry about how their competitors are progressing. A lot of companies which came before and after or together with DMart, they grew very rapidly by taking a lot of loans and having great expansion plans. But DMart stuck to its own business model, and it grew at a very stable pace. There were a lot of companies who jumped into e-commerce and made losses, and even now they are making losses. But DMart, until unless they were very sure, they did not enter into e-commerce, and now very recently they are steadily getting into e-commerce also. The next secret is the slotting fees. Not just for DMart, for other brands also, but this is an additional advantage to DMart. Whenever somebody wants to sell anything to the big stock supermarkets, since the supermarkets have a lot of stores, it's a chain concept. The brand which wants to sell any product in these supermarkets has to pay a fees, like an entry fees called slotting fees. So when it pays that, then only they allow those products of that brand to be sold across the country in all the branches of that supermarket. So this gives an advantage, an additional profit to DMart. In spite of getting the discounts and other advantage, this becomes an additional earning which gives DMart a bigger advantage when compared to its competitors. So these are the secrets which DMart's success is defined. Now coming to the stock fundamentals, DMart presently called Avenue Supermarts is trading at a price of about 2,300. In spite of the market crash, it is trading very high. The 52-week high and low is about 1,200 to 2,500 rupees. The market capital has grown to 1,56,000 crores of rupees. The PE ratio is very high now at 122. Industry PE at 86. The earning per share is at 19.54, and the price book ratio is 27.77. Revenue as on March 2019 is 21,827 crores, which is a good number, and the company is profitable and is earning sufficient profits. If you see, it has earned 936 crores of profit in the year ending March 2019. So the company has very strong fundamentals. Another advantage is the promoter stake is 77%. Mr. Damani owns a majority stake in the company even now. The track record of the promoters is very strong, as the Mr. Damani itself is a brand in the market. New companies like Flipkart are approaching DMart to have collaborations and partnerships to grow their business. Mr. Damani is the only tycoon whose wealth has grown up even in the conditions of market going down. The other competitors like Future Group has about 1300 stores, and other competitors like Reliance have much higher stores when compared to DMart, but per store profit, if you see, DMart is earning much more than its competitors. And a lot of competitors before DMart started, like Subiksha and all, they have come and shut down. In this kind of market, DMart has come up recently and it has been earning a lot of profit and growing steadily. Faster growth in future as more cash flows coming in from more stores. Since DMart is growing very fast, it has opened a lot of stores. All these stores will earn a lot more cash flow, and this cash flow will help in growing the company even faster as the company goes forward. So there is a double advantage or a very unique strategy of DMart if you have observed. Least price for the customers plus highest profit for the DMart. Generally, if there are any companies offering heavy discounts to the customers or least price, they cut down their margins and offer. But DMart is offering least price in spite of earning good sufficient margins. That is why DMart's model is very unique. Now, after studying this case study, I leave a question in your mind and I want you to answer in the comments. Can DMart become the Walmart of India? By looking at the case study, by understanding the uniqueness, by looking at the fundamentals of the company and their plans for growth, I want you to come with an answer and comment below, and let us discuss whether DMart can become the Walmart of India. So this company has huge potential and a bright future, and there is going to be good scope of appreciation if you invest in this company. This is not a recommendation, but this is a case study which we are discussing. Based on our case study, you can take your own decision whether or not to invest in this company. So I hope you like this video. This is my first case study video, and if you like this video, hit the like button, subscribe to my channel and hit the bell icon not to miss any updates. Now, if you want me to make more case studies, you can comment the names of the companies below. I will make the case studies on those companies. So thanks for watching and have a great day.